In 2019, Saudi Aramco went public in what was called the most ambitious stock market debut in history. It raised $25 billion. Now Elon Musk is about to do it better, by a factor of 3. SpaceX, the rocket company that almost destroyed itself 3 times before reaching orbit, filed its S-1 prospectus with the SEC on May 20, 2026. The target valuation, somewhere between $1.75 trillion and $2 trillion. To put that in perspective, that would make it one of the most valuable publicly traded companies on the planet, on day one. But there's far more to this story than just Musk and rockets. This IPO is really 3 stories in one. A satellite internet empire, an AI company, and one of the boldest bets on the future of human civilization ever taken to a stock exchange. Let's break it all down. For years, SpaceX stayed private. Musk had always insisted the company didn't need Wall Street money, but in 2026, something changed. In February, SpaceX completed an all-stock acquisition of xAI, Musk's artificial intelligence company. That merger created a combined entity with $18.67 billion in revenue for 2025. Here's the breakdown Wall Street actually cares about. Starlink, the satellite internet network, generated $11.4 billion in 2025 alone. That's 61% of total revenue. Launch services added another $4.1 billion, and the company crossed 10 million Starlink subscribers in February 2026, with projections to hit nearly 17 million by year-end. The Starlink mode is real. No company, not Amazon, not OneWeb, has come close to replicating it at scale, and that's what the valuation is really pricing in. But here's where things get complicated. When SpaceX absorbed xAI, it also absorbed its losses. The xAI segment is burning cash at a dramatic rate, with $25.45 billion in contractual commitments, 95% of which are due in 2026 and 2027 alone. Investors are essentially being asked to fund Musk's AI ambitions on top of everything else. SpaceX even revealed it spent $131 million buying Tesla Cybertrucks in 2025 at full retail price, raising questions about how shareholder money will interact with Musk's other companies. Governance is already a talking point on Wall Street. The lesson here is classic Musk: visionary product, complex structure, and uncomfortable related party transactions baked right into the prospectus. Buried in the S-1 is something almost nobody is talking about. SpaceX wants to build data centers in space, satellites equipped with GPUs, powered by solar energy, processing AI workloads in orbit. The company calls it orbital AI compute, and claims it's a problem only SpaceX can solve at scale in the near term. Experts are skeptical: launch costs, radiation exposure, heat management, but Musk has been called unrealistic before, and he keeps proving people wrong. If orbital compute becomes viable, it would be one of the most valuable infrastructure plays in history. Here's what the capital takeaway is from the SpaceX IPO. The biggest wealth creation events in history happen when a monopoly-level advantage, like Starlink's satellite network, gets combined with a compelling future narrative. That combination pulls in capital like gravity. The risk for investors is that they're not just buying a rocket company, they're buying a thesis about the next 20 years of human civilization. And those kinds of bets don't always pay off on the timeline you expect. If you found this breakdown valuable, subscribe to The Capital. We cover stories like this every week. Drop a comment below. Would you buy SpaceX stock on day one?